Hello, welcome to my channel. This is Remoria First for my student Remoria Academy. Today we are going to discuss something important. I want to discuss six basic things, six fundamental things that as a beginner in the Forex industry, there are six things that you ought to know. These are some of them. There are a lot of things to know, but these are just the six basic things that I know that when you know them and apply them to your trading career, is going to be helpful, and in the long run, you'll be very profitable. One fundamental thing is as a forex trader, you must trust your analysis. You must trust your analysis. When in the morning, whosoever time you are trading, when you come to the market, you make your analysis, trust your analysis. That's the first thing. To be profitable in the forex market, you must trust your analysis. Then number two thing is, after making your analysis, you must look out for something. What do I mean by that? Looking out for something, I mean you have to after making your analysis, you have to say, okay, when it happens this way, when you break and close above this resistance, I'm going to take a buy. When you break and close up below this support, I'm going to take a sell. So there are things that's irrespective of your strategy, no matter what your strategy is, but you must look out for something. Then when you say, when it happened like this is what I will do. Then that is the second thing. The third thing we ought to do when we come to the forex market is to be patient. Just wait. Allow the market to come to you. Don't rush to the market. Be patient enough to allow the market do whatever I want to do. When it comes and it happens the way you have planned, the way you have assumed that when it happens this way, I'm going to take a sell. When it happens this way, I'm going to take a buy. Because you are patient enough, when it happens, you'll be able to know. And if it does happen, the next thing, which is the number four thing, is for you to execute. Take the trade, whether it's a buy or a sell. But you have to be patient before taking that trade. Make your analysis, trust your analysis, look out for something for you to say, okay, when it happens this way, it's a buy. When it happens this way, I'm going to take a sell. And be patient enough to allow it to happen. Then, for those, when it happens, the fourth thing is take the trade, execute. Don't waste time, just take the trade. And when you take the trade, make sure you take the trade. The fifth thing is there must be a stop loss in your trade. You must trade with stop loss. And while placing your stop loss, don't place it too tight and don't make it too big, so that allow the market to breathe, but don't make your stop loss too big. Let's take for instance, in terms of stop loss, there's something I want to bring up here. When you are trading and your stop loss is 25 pips, and you execute this in a drawdown, there is a way trade reacts. You will know that this trade is not going in my favor. It's not going the way I want. The market doesn't just want to happen the way I want it. Then and your trade is already running in 15 pip drawdown, and your stop loss is 25. And you see the way the market is moving. You are observing and watching that it's not going in your favor. So I advise that by the time the market is almost 20 pips, you just close it and save 5 pips. Because if you have maybe plan to lose, maybe you are trading $2 per pip and you are plan to lose, say, $50, that's what you are risking. Maybe you are trading, your stop loss is $50, and the way the market is going, you know that it will end up hitting your stop loss. Then when it's 20 pips and you see the way it's going, it's coming, you at least as a forex trader, you'll be able to know when market is retracing, when market is grabbing liquidity, but the way it's moving and it's not the way you want, it's not moving the way you want, you close it at 20 pips. At that point, you're going to lose to $40 instead of $50. Then don't lose completely what you tend to lose. There are times you allow it to hit your stop loss, but most of the time, don't allow it to hit your stop loss. If it's moving and you see the way it's going, just get out of the market. If you don't do that, it will enter into hope, especially for those that trade without stop loss. Please don't do that. As a beginner, don't trade without stop loss. Because if the market is in drawdown, you are losing and losing. There's a level you get to, you begin to hope that it will come back. And the more you hope the market is coming to your direction, the more you hope it will reverse, the more it go into drawdown. So the essence of putting stop loss is to prevent you from losing what you are not supposed to lose, is to prevent you from running your trade into hope. Because in the forex market, there's nothing like hope. You don't hope that it will come back. No, if it's not going your direction, you exit. Then the sixth thing I want to discuss is take profit. Yes, we all know what take profit is, but there's an aspect of take profit I'm going to discuss, very important. That is, if you are trading a 50 pip range and the market is running in your favor, by the time the market is running 30, 35 pips, close 90% of your trade in profit, take your stop loss to break even and allow the market to run. If it goes ahead and hits your 50 pip, close, cover the 50 pip range and hit your TP, fine. If it comes back, maybe it comes back and hit your stop loss at break even, fine. You are done and you'll be okay with 90%. Because sometimes when trade is going on and you feel it's a 50 pip range, that you want to get all the 50 pips, by the time the market will get to 38 pips, then sometimes it will just be retracing. You feel it's grabbing liquidity to continue. From there, the market will reverse. Then your 35 pips, before you know, you are running into drawdown. You close in loss when you are supposed to have closed partial profit. So some people will advise you to close 80%. For me, as a new trader, I'm advising you close 90% of your trade. You close 90%. So meaning that exit and entry is very, very important. Let's recap what we just said. You come to trade in the morning and you come to the market. When you make your analysis, trust your analysis. Two, you must look out for something. After making analysis, analysis is just to say, when it happens like this is my trend line, this is my support, resistance, whatever strategy you are using. Your analysis is saying that when this is what I've analyzed, if it happens like this, I'll take a sell and take a buy. Just look out for that. Be patient enough for it to happen the way you want. Just be patient. Wait. Allow the market to come to you. Let the market pay you for being patient. And when that thing you're looking for, when it happens, that will execute. Trust your analysis enough and execute. After placing the trade, put in your stop loss immediately. Stop loss immediately. Yes. You have to put in your stop loss. And I'm advising that it's important you lose less than what you intend to lose. Then for take profit, please, if your take profit is let's say 40 pips, make sure by the time the market is running 30, 32, 33 pips, close 90% of your trade, allow the remaining to run. Then you take your stop loss to break even. At that point, you watch the market and be happy with what you've done. These are the 6 basic things as a new forex trader that when you apply it to your strategy. I'm not teaching strategy today. I'm just teaching, no matter your strategy, apply these 6 basic things. Trust your analysis. Look out for something to take a sell or a buy. Be patient enough. Allow the market to pay you for being patient. When it happens, take the sell, take the buy, place your stop loss. It's very, very important. Then for TP, most of the time, there are times that before you know it will hit your TP. Congratulations. But when it's going and you see it's going retracing, and it's already 80% towards your TP, 90% towards your TP. So what are you waiting? If you close 90% of the profit, take the stop loss to break even, allow it to run and watch the market play. I believe when we do this, we will be happy, we will be profitable, losing less than what you intend to lose, and then closing partial profit, bringing your stop loss to break even. When we do this trusting analysis with patience, it will be very profitable. Please, for those of you coming here for the first time, this is Remore FS once again. Thank you for watching. Please share, subscribe, like, hit the notification button, write your comments in the comment section so that we'll be able to know. Tell us if there are some topics you want us to discuss. Write in the comment section so that we'll be able to address it in the next video. Thank you so much for watching. I'll see you in the next video. Peace.